it is fashionable to say that we do away with dollar. It is, I can tell you, it is impossible.
I
Number
love
one.
that answer. Yeah.
And when euro started to 1997, 99 times, I forgot the exact.
Yeah.
Euro started, we went around on behalf of FEDE across India to lecture what is going to be this animal, euro. And in my presentation, I have all the presentation, thousands of presentation now, even now. I go through, I commented there that euro can challenge dollar. Was the headline on the presentation I used to give, that one day euro will challenge dollar. But I am proved wrong, and now I realize it is not easy to replace American dollar in the nearest future time, for one reason, that most of the trade balances, I mean foreign reserves of the entire world, despite the South being so strong, India, China, Japan, Thailand, Taiwan, kind of people having the largest share of the trade balance, I mean foreign reserves, still they are predominantly in US dollar, not even an edge in euro, with only hardly 20%. So I will still believe that it is politically fashionable to say that we will do away with dollar.
The Sound of Money with Santosh Sirur.
Hello and welcome to another amazing masterclass episode on this podcast, The Sound of Money. Today, I have a very, very special guest joining me from London. He's Mr. Harshan Kollara, someone who I have been associated, known, and more importantly, a very, very important person who played a very crucial role in my life. Mr. Harshan Kollara, because of my career with ICICI Bank, incidentally, my first bank to begin my career, and I know him literally almost since day one, though I haven't worked with him in the same department. He used to work, and both of us, we were, because of foreign exchange, reconciliations, I have been working with his team, so I know him very quite a bit. So that's Mr. Harshan Kollara joining me on this very special episode of my podcast, The Sound of Money. It's going to be a masterclass in foreign exchange. All you wanted to know about foreign exchange, Mr. Harshan is here with us. And from A to Z, we're going to discuss foreign exchange on this very special episode of The Sound of Money. Hello, sir, and welcome to my podcast, The Sound of Money.
Thank you, Santosh, indeed. Thank you for being part of this.
Thank you, sir, so much. Mr. Harshan Kollara, actually, he's just to give you a brief introduction, he's the interim chairperson at the Association of UK Payments and FinTech. He's also a non-executive director, independent director at Manapuram Finance, and also at Ashirwad Microfinance. Apart from that, he's also been a non-executive director in various companies in the United Kingdom. And of course, he's had a stellar career in ICICI, where he was heading foreign exchange between the late 1990s and early 2000s. So, Mr. Harshan, sir, when it comes to foreign exchange, and especially working in ICICI, the one name that always hit us each is Mr. Harshan. And sir, it's so glad that you are on the other side of the screen joining me from the United Kingdom. I have very, very basic questions for you on this episode. Let's start off. My first question to you, sir, is why foreign exchange, or Forex as it's considered, and is important, and how does it really impact our daily life today?
Thank you. In comparison to any other asset classes, what we all know, foreign exchange occupies an important position because the economic impact of a foreign exchange transaction or anything is much greater than any other asset class in the system. For example, it impacts us directly or indirectly in various ways. in day-to-day life, when we need to send money abroad, or when we have to travel abroad for tourism, etc., we are directly being exposed to foreign exchange. You cannot take your Indian rupee to foreign country when you travel. Now, that being not necessarily to everyone, but the second issue is that when when the petrol prices goes up or goes down, it is actually a foreign exchange plays the direct impact on the pricing of petrol. So we are, even though we don't go abroad, we are indirectly being hit because of a foreign exchange related movement across the globe. So whether we say that we are not affected by foreign exchange, why do I worry, is not the right response, because you are otherwise also exposed, which we call economic exposure of every individual to foreign exchange on the economic exposure, and the transaction side, whether you can choose to go abroad or not go abroad, but it is becoming increasingly important.
Okay, that's really good to know. So what is the exchange rate, and what is it that who sets this exchange rate, and what influence does an exchange rate have on an individual?
Exchange rate, unlike other commodities, is set by mainly two participants in the market, what we say. One is, wherever applicable, it is set by the central bank, because of the economic consequence of an exchange rate in comparison to any other price. I call exchange rate a price of a commodity called foreign currency. A dollar exchange rate is the price of the dollar. So we don't want to confuse people that exchange rate is something out of the world. It is the price of a dollar in terms of rupees. So who sets price? Because central bank is concerned that an exchange rate of a dollar vis-a-vis rupees will have a direct economic impact. So in certain countries, they are set by the government or through the central bank. Which we call a pegging. We call it pegged currency, like in entire Gulf, I presume it is a pegged existence. The dollar, they've set the exchange rate, the central bank sets it, and nothing can be done about it. Whereas in other countries where we call it free floating countries, full convertibility exists, the market discovers the exchange rate, where neither central bank nor government or any other person have a direct influence into the exchange rate, though occasionally they do influence, but eventually the directions are set by the market.
Okay, I get that point. So the role of a central bank, the regulatory, the main regulator, or the apex bank, as we know, or for that matter, even the government in a way, is very crucial in exchange rate. What are the roles the government or the central bank really play in the exchange rate mechanism?
There are two ways of a central bank role. One is they decide the purchasing power parity issue, what we call in PPP. PPP is nothing that the pricing of the factors of production, and simply put, how much US pays for a McDonald's Big Mac and how much India pays for a McDonald's Big Mac are different. Which is because the production factors like labor cost, raw material cost are different in both countries. So that essentially sets, which is called the purchasing power parity exists between these two countries, are the main factor in deciding the value of the money. But that not necessarily is the exchange rate. For example, Indian PPP versus dollar is said to be roughly around 101 or 102 PPP, whereas, 877 or 78 or so. But the currency is running at 83 or so. So the currency, it is difficult to say it tracks PPP, but it is more or less somewhere around. That is the way, and one way of PPP. The other way central bank sets it or influences our exchange rate is by intervening market.
Yeah.
When the markets heats up, they intervene by either selling whichever manner it is necessary, or either buying or selling, so that the currency is not deeply diving down or up, which impacts the economy well. So these are the two tools we say by which the central bank and the government influences exchange rate.
Okay, amazing. So you mentioned a little about pegged currency versus floating exchange rate.
Yeah.
So if I may know, what are the kind of key differences and what is the motive behind pegging or these floating exchange rate?
Interestingly, the pegging is because the country never wants some speculators abroad punting on its currency. Because currency is also a kind of pride for each sovereign.
Yeah.
And people punting it abroad and kicking it up and down is matter of concern for country. That is one reason. Second reason, the country do not like their citizens to be troubled by undue speculation of currency. And there are certain religious issues which is historical, that speculation is forbidden in some religion those days.
Okay.
So they don't want, ultimately it is a speculative effort. So it is to prevent speculation in and around their currency is the main concern.
Okay, get it. Yeah, okay. So the other question I have for you in this masterclass on foreign exchanges, what are currency markets? Now, what are the leading markets in the world and their characteristics? The reason I ask you is there's so much that a common man hears about currency markets, and it can be a great career for a lot of people who want to pursue a career in foreign exchange, especially the youngsters. So, if you could delve a bit deeper into what are these currency markets all about?
Yes. Currency market, if I take you back into history, in the first millennium, there were certain Gulf countries or residents in Gulf used to exchange money by copper coins, based on metallic coins. And they used to come together in some place and exchange metallic coins between that. It was first millennium. And second millennium, reasonably market started evolving. But during the World War One, it was total shambles. So essentially market evolved after that.
Okay.
And until 1972, between World War II and 1972, there was an agreement called Bretton Woods.
Yeah.
Bretton Woods meant that no country can float their currency. Every currency is pegged, meaning exchange rate was insured or assured to everyone until 72. And 72, Bretton Woods failed, collapsed.
Okay.
Thereafter, it became a merry-go-around for everyone. And some central banker started that even though Bretton Woods failed, we will continue to be supporting our currency and some exchange rate will be constant. Whereas several countries said, we cannot afford to do that. Let the market, like any other commodity, let the market decide based on the supply and the demand situation of that. Now, eventually that evolved 70s, 80s, 90s and all. It is now fully matured market where everyone can access. There are certain restrictions in India. Yeah. Everyone can access for their own requirement or speculative thrill. And the markets are rather abstract.
Yeah.
You will not see a Crawford market or Sabji Mandi in Panvel.
Physical market.
APMC kind of stuff in currency market.
Yeah.
This is an abstract form, which is two markets we have seen. One is an OTC market, over-the-counter market, which is mainly the banks and large investment banks are the participants and the public wherever. And the exchange trader market, which is stock exchange, CME in USA, LME, London Metal Exchange in UK, and in India we have BSE, NSE kind of thing. So these are organized markets. Again, abstract. So there are two ways: OTC market and exchange traded market. Both these offer market and of price, commodity to everyone who needs. So you can participate through any of the markets, OTC market or exchange traded market. But your country should have that kind of permission to the subjects to do that. Now, currency market offers a great opportunity, controlled, not wavered people but I will not suggest everyone to go into to foreign exchange market because it's milk and honey. It is not. It is not. Like your stock exchanges, it is not. The people are getting fooled or otherwise.
Yeah.
Unless you know the stuff very well, unless you know the controls very well yourself, plus unless you have a great nerve to support, I would not recommend anyone to participate, because in my early days, some of the people who I used to work with, late Mr. Rajwade, is very famous. He wrote a lot of books on that, and not many people. They used to say, Harshan, foreign exchange is probably the one thing that your decision is right or wrong is told back to you in the next second. Whereas in any other situation of life, a decision made by you, the resultant outcome is known to you probably after several hours or several years or things like that. But in foreign exchange, you are slapped back instantly. Look, Harshan, you were bloody wrong. So this is the situation in foreign exchange. So people, yes, it is a good, because in the UK and all, we are permitted to participate in any market. We do operate, and there are tremendous activities, what we call arbitrage. Example of arbitrage, to take you further to one more point, not to confuse you further. Arbitrage is, for example, if CME is pricing dollar at say 1.5, 1.33, but the other Singapore exchange is pricing at 1.52. Probably buying from Singapore and selling to CME instantly without moving away from your seat will fetch you a few bucks.
Amazing. Yeah, absolutely.
Few bucks.
Yeah.
So this kind of arbitrages are very large in the huge, because it is time difference and the information difference within a seconds, which is happening, and people are more into arbitrages and across markets. These are all probable opportunities, and which individuals and firms can participate in, subject to restrictions internally.
Okay, get it. Absolutely amazing. Now let's move on and a little bit of focus on the Indian foreign exchange market. If you could share a little bit about the history about the Indian foreign markets, and more importantly, who are the kind of market participants that we see in the Indian foreign exchange market, and what are the kind of specific features around it?
Yes, Indian foreign exchange market started early 75 with the RBI's heavily early 70s, and started with the Reserve Bank of India controlling closely. Everything has to be bought or sold to Reserve Bank of India kind of thing. And those days, for going abroad, we had to go to Reserve Bank to get a permit. I don't know whether you remember in those days, whenever our senior executives go abroad, we take an application to Reserve Bank and take a permit.
Agreed.
And then issue them dollar. That was the controlled regime. And Indian market evolved since, we used to have a very rigid law called FERA, Foreign Exchange Regulation Act, which was very rigid, and people are afraid to violate because there was a criminal liability in FERA. So we were living under FERA during that year, 70s, 80s, and 90s, FEMA came in, which is much liberalized. And in 90s also, because of the whole balance of payment crisis, etc., India started partly floating currencies. Okay. Now that effort continued, and as a result, we are now in a situation that Indian markets are reasonably free. And originally we had only OTC markets, meaning only banks used to quote and sell to you and buy from you kind of stuff. But thereafter, in late in 2000s, we got the currency futures market coming up in NSE, BSE, and that kind of market. So it evolved over a period of time, and it is now reasonably matured with people. I gather the volumes are pretty high, daily volumes, what we say, because if you look at the what is that settlement platform, CCIL, they quote the daily volumes, which is pretty large. Most of the transactions are permitted, but individuals have restrictions.
Okay.
But even then, people are now participating OTC market with restrictions, which is banks are the participants, and public can involve, but corporations do involve very heavily. And the futures, like NSE futures in forward futures and NSE, BSE, etc., are now being very well used by Indians for trading in foreign exchange. So more or less, I will say that in a scale of 10, Indian market is matured to the level of 6 to 6.5 as of now. But the issue continues because unless you become 100% convertibility, which we don't have. There are limitations of Bombay becoming a Hong Kong equivalent or a Singapore equivalent or a London equivalent. And what this we say, the money centers of the world are Singapore, Sydney, Hong Kong, London, and New York.
So where are we in terms, as an India specific, where at which stage of the journey are we towards a fully convertible exchange rate, or is that something that the government has yet to take a call? Because the reason I come from the question is, you see a lot of dollar inflows, the FDI is increasing, and India is really becoming the darling of the world. So do you at one point in time see India fully convertible?
I have to answer that in two steps. One is that it need not be fully convertible to make it a huge matured market. Meaning you can trade in any other currencies also, not necessarily Indian rupees. Indian rupee is not a considered currency in the global trade mechanism. If you look at 70 to 80% of the global trade is invoiced in US dollars, 20 plus in euro, and balance only in other currencies. So Indian rupee convertibility, I will not put a major hindrance for India becoming an absolute mature market. The actual issue is the infrastructure. Infrastructure. Interestingly, in terms of people, we have the best. I can tell you, if you go across the globe, if you walk into global trading rooms, which is several tens of thousands of square feet with Reuters and Bloomberg screens, you can see Indians color, Indian people doing transactions, the brilliance of Indian people, which I concede. So the people wise, we have the brilliance, but we are still behind infrastructure building and corresponding enabler building. These are the two things. For example, sitting in India, sitting in UK, I have a dollar account in America, which I use it for trading in American exchange. So it's the same thing. I can't have it in India. I have a dollar account for trade in India. You getting my point? I can't have a dollar account in India to trade in dollar. Not in Indian rupees. But recently, the Ahmedabad, what is that called? Gift city is now igniting that. I'm also deeply being following that. So I'm quite happy to see that Gift City is evolving into a global market for currency. Eventually, probably during our lifetime, we will be able to see that happening in Ahmedabad, like a junior Singapore market or a junior London market happening.
Absolutely.
Which is my hope.
So India is inching towards that maturity, I guess, through the Gift City route. Absolutely. Let's talk a little about the global currency markets. And as you mentioned, the Singapore, the Hong Kong, the New Yorks and the Londons of the world. What are the kind of unique characteristics? Because what I know is, because of the different time zones that they are in, they are literally 24/7. Having said that, they are 5-day week. So what are the kind of unique characteristics you can see of the global currency markets?
I will go by two sides of that. One is that global characteristics in terms of the markets type and working style.
Yeah.
It is 24 hours a day. No one sleeps in foreign exchange is the truth. It's if you start at early morning Sydney, it Hong Kong takes over, Singapore takes over, Bahrain takes over, London takes over, then New York. Then by the time it is early morning, Sydney takes over. So no closing, closing of a day in terms of foreign exchange. Individual countries announce their closing rate based on their timing. Market still goes on.
Yeah.
Market still goes on. So there's no end. Only it closes on Friday.
Yeah. Okay.
It is 5 days a week, 24 hours a day trading takes place. That is one. And two, there are certain it originally was by the mouth, by the word of the mouth it used to be, because a dealer says done, he will not go back from that. A dealers were
key factor.
a dealer, because we used to trade in 70s and 80s in India over phone.
Yeah.
Over phone. So we take a phone and say that, yes, I bought $1 million and disconnect the phone. And if the market moves against me, I can't go back. No, I didn't say so.
Yeah.
Dealers' words are the word. Words are final and respected across the world. The dealer said is final. So that kind of ethics existed in the currency market participants. Nobody has ever gone back from whatever they said, despite they suffered a loss on that.
Okay.
So ethical consideration is very large in currency market. That is one. And two, there are certain quoting conventions that market follows. Two-way prices. Whenever anybody comes to you, any trader will ask you, you want to buy or sell? Is a question which foreign exchange people take it as an offense.
Yeah. Okay.
When you come to me, Harshan, I want to buy or I want dollar price.
Yeah.
And I don't ask you whether you want to sell to me or buy to me. It is none of my concern. I'll give you a price which is called a two-way price.
Okay.
Sirur, you decide whatever you want, but this is the price. So that is a convention across. That is typical characteristics of even OTC market or any market. Okay. Two-way price. So you have the pleasure on doing so. And that goes around. And it is all machine driven now. Everything is now machine driven. Reuters.
Yeah. So what is the difference between, as you mentioned about OTC or over the counter, and the exchange traded contracts in foreign exchange? What's the key difference?
The key difference is that the in exchange traded market, it is the exchange takes the counterparty. Exchange is a big company or a formation, and they are the counterparty to the trade. So in terms of risk for a trader, it is a safe thing.
Okay.
It is a safe thing. So in the exchange traded market, the counterparty is the exchange, whereas in OTC, the counterparty is the corresponding bank.
Okay.
So if, for example, I trade with an XYZ bank in India, and if that XYZ bank in problem, my trade is disrupted. I will not be able to respect that in the market. So that way the risk is lesser.
Okay.
And the second is that it is the OTC can afford to say no, that I don't want to do the trade. But exchanges cannot, because it is offered totally free.
Okay.
So that way, exchange traded has an attraction over. But in exchange traded, there are standard contract size.
Okay.
$10, $50, $100. Whereas customized, if you want $9.50, exchange trader will not help you. OTC you have to come to.
Okay, that's the key difference. So how do these traders actually interact with foreign exchange markets in real time? And I know it must be a lot more different in today's situation because of so much of digital connect. But I'm sure equally challenging in those years when never know, as you say, you were on landline phone calls, literally talking to someone. But today with foreign exchange being, through the digitization world, or for that matter, with the mobile phones, how do these traders actually interact from maybe a London and a New York or a Singapore and a Hong Kong, or for that matter, Sydney?
There are as of now, there are two ways of interacting. One is the phone exists even now because as an individual, you cannot have state-of-the-art systems to interact. You still do with your requirement over phone.
Yeah.
If you want to remit out to somebody from somebody to America living a student fees,
Yeah.
you call your banker, sir, I want to remit $50,000. So it is a foreign exchange transaction deal. So that happens. That is a part. But a professional trade takes place in two ways. One is that there are online mechanism offered by the OTC participant. For example, ICICI Bank has has a platform on which you can access, log in, and trade.
Okay.
So OTC providers do provide online platform, electronic platform that you can subscribe, be a member, and trade with the permission. And then the exchange traded stock exchanges and CMEs have their own platform. So you can, after becoming a member, you are permitted to access the platform. You do trade on that. This is the one way of it. And the other, and this one, the OTC is offered by individual, and this one is offered by exchanges. On top of it, you have certain platforms, Reuters platform and Bloomberg.
Yeah.
They offer platforms connecting exchanges across. So these kind of three variants exist, but each has its own uniqueness and cost implications to you.
Okay, get it. And why do these exchange rates actually move in every split second? What's the key reason for that? What really triggers these exchange rate moves?
Exchange rate, we say in the market that in a flowing river, you cannot have two dips. By the time you do one dip and come back and go for the second one, the water has changed. The entire water has moved out. Similarly, we say in a foreign exchange, you cannot have two deals at the same time at the same price in same second.
Okay.
The reason the split second, I don't say even second, split second movement takes place. Because the activity is so intense and the expectation is also so intense that everyone expects the rate to change any second. And the changing happens because of two reasons. One, transactions happening. Meaning every second there is a transaction happening, impacting the price.
Yeah.
Any transaction happening on one side has to impact the price. For example, if you are buying huge amount in dollar, automatically market psychology says that the price has to be, next price will be down because somebody bought so heavy.
Yeah.
Indirectly meaning, we think parallelly, laterally, oh, there is a demand, so I should squeeze my price. So that is the reason behind changing the immediate. The second thing is speculation. People speculate. And the third issue is expectation. That look, I think the price will be something like 84 day after tomorrow. So I keep on doing my activity. So it is intensely activity in the market changes the account, changes the exchange rate. And the second is, on a economist perspective, exchange rates are changed or moved because of fundamental factors.
Okay.
Economic expectation, budget coming out. These are very important things in the exchange market influencing exchange rate. Like interest rate was cut by US last week.
Okay.
Automatically exchange rate moved.
Okay.
And so fundamental thing affecting economy releases, what we say releases, economic releases in the economy affects exchange rate to move.
Okay.
Activity happening, large inflow, because a foreign company buys out an Indian company paying several $1 billion, which essentially means that billion will come in the dump in the market. So these kind of transaction expectations happening, that will change. Then events happen. Somebody, American president resigning, or treasury secretary resigning. Like essentially it is like a stock exchange psychology, that any event, any price of escape moves. Similarly, these are subjected to fundamental factors because of economy. Two, we call it technical factors. lots of traders trade, a professional trader trade based on certain technical factors. There are technical theories like Elliott wave theory. A lot many theories exist in, if you see the graphs and things like that. So they analyze this and trade on that. I don't know what is the reason behind it, but it's essentially is a technical trader, a fundamental trader. These are the main issues, and economy and events. So these are 4 or 5 factors impacting exchange rate.
Okay, fine. Wonderful, sir. What about the market conventions? Foreign exchange always has some very typical market conventions one across the world follows. Any of those, typically what I've heard is direct, indirect, pips or tick. What are these quoting conventions? If you could throw light on that stuff.
It is, interestingly, it is never on paper yet.
Okay.
Never on agreement yet.
Okay.
But it is followed for ages now, because I started in 1975.
Okay.
So since then, I have been taught by someone, this is it. I also teach the people the same way. Probably my my children also will be learning the same thing from anywhere, even after 100 years. One of the important convention is that a direct and indirect rate. Meaning, if, for example, India quotes $1 equal to so many rupees.
Yeah.
But which is called a direct rate.
Okay.
Okay. But if you go into US and say that $1 is equal to rupee this much, to US it is indirect rate.
Okay.
Okay.
Yeah.
So each country has its own style. That India says I am on direct rate. Whereas in 1975, 70s until really late, we used to have an indirect quote.
Okay.
100 rupees is equal to $2 or $1.5 used to be the Indian style.
Okay.
The problem, it is easy for you to say that $1, this is the rate. But who trades on a two-way price? I do not know what is the buying rate or what is the selling rate. It's quite a confusing setup for us when we started learning foreign exchange. But essentially, we learned we climbed the ladder step by step by understanding. So direct and indirect quotes are the main thing. And in countries, we call it 4 major. Even now, even 50 years ago, even several years ago, the majors used to be currency. We call it currency pair. One currency versus other. Unlike India, gold market and all, we don't. Gold market everywhere. Gold is priced in dollar.
Yeah. Yeah.
Whereas we price currencies by pairs, like dollar yen.
Yeah. Yeah.
Dollar pound.
Correct.
Then euro, Japanese yen.
Yeah.
Yen, pound, dollar, euro. There are 4 majors in the whole world.
Yeah.
Euro is an direct quote.
Okay. Okay.
Britain is £1 is equal to, Britain and euro are indirect quotes.
Okay.
£1 is equal to so many.
Okay. Okay.
Whereas dollar is $1 is equal to everywhere, any other currency. This is direct and indirect quotes in the system.
Okay.
Which is a matter of understanding.
Yeah.
The other thing is wherever in the world, a currency market offers a two-way price. And the convention is that when an offer is given, there is a split second availability for you to say yes or no. Until then it holds. It is held.
Yeah.
And you can decide on sell or buy, whatever it is.
Yeah.
So that is another. And the third one is the decimal points. What we say points, pips and points. We call it pip. Oh, currency market moved by 25 pips.
Okay.
Pip is another convention. Pip is the 4th decimal place in a quote.
So important, right? Every decimal point can make a huge difference.
Every 4th decimal point is an important.
Imagine. Yeah. Yeah.
4th decimal point is the pip.
Yeah.
And market dollar to pound and dollar to yen, dollar to euro moves by 4th decimal points.
Okay.
Okay. And yen moves by the second point. The second decimal point is point.
Okay. Okay.
Point.
Got it. Yeah.
Which is convention only. There is no theory behind it.
Yeah. As you rightly say, there's nothing written about it, but it's the way it's
and the next point is that the ticks. We say when the market tick size. So for example, I'm a firm offering foreign exchange. And a tick is the size at which the price can be moved up or down.
Okay.
For example, Indian rupee is 83.45 today.
Yeah.
If I say tick size is 1 paise, that means the professional company or firm offering foreign exchange has to offer the next price movement has to be 83.46 or 83.47.
Okay.
It cannot say that no, I want 83.50 or 83.70.
Okay.
That is tick size. The rate can be upped or downed by only that point, which is not written.
Yeah.
So we respect the tick size.
Yeah.
The price movement is only by the tick.
Absolutely.
These are the major conventions we are seeing in the market.
Okay. And what about the kind of products or the instruments that are being dealt with in or transacted in the foreign exchange market?
Right. Interesting. The type of contracts are contract or transactions are by nature of delivery. By nature, when we will get the access to that value or the money I bought or sold.
Yeah.
The contractual delivery.
The
contracts are structured around delivery, meaning we say it same day deal, or in India we say cash deal. The same day I will get it. So whenever you do a transaction, I'll say the price is cash price. Then there's a TOM, TOM, tomorrow value. Value tomorrow. I mean, I will do the transaction today, but will be deliverable tomorrow. Everything fixed. Okay. Even if the rate goes up or down tomorrow, I cannot move out. Yeah. And spot, second working day, spot date. And thereafter forwards. Okay, these are the three delivery based structured contract exist in the market, and which as per your convenience you can, and the price will be fixed on the day when the trade is done. Okay, wonderful. Okay, what about this very known term on as capital account convertibility and account convertibility? Which is used everyone by default nowadays. We never knew what is a capital account and current account. Yeah. Which is very simple. Every country is conscious about capital account and current account, which is all economists knows very well. Yeah. A current account transaction is if I take as an individual, if I build a house, it's a capital account. Yeah. If you invest in a stock exchange, it's a capital account. But you go and buy certain things from the grocery shop, it's a current account. Day-to-day kind of thing. Yeah. Day-to-day kind of thing for the consumption. Essentially, you migrate this factor into a country. If the country's money is being used for infrastructure, all those things, it is capital account transaction. Okay. If the country uses its exchanges for buying oil, other things, tur dal, all from Turkey, chickpeas from Turkey, it is a current account transaction. So every country tries to use this, balance this flows out for current and capital. Okay. Now, coming to the actual situation in India, whatever we get for foreign direct investments, all those things, capital market investments from abroad are called capital account investments. Okay. Capital account transaction. Whereas all the imports, export happening for buying, selling, pharma, all the things are current account transactions. And in a realistic situation, being a current account surplus situation, meaning we have more exports than imports, is always considered good, like China. Yeah. Whereas a capital account transaction going beyond a point is a risk. That is why India is very careful. Foreign direct inflows, people may be so happy to have that news that India got several billion investment. Yeah. That poses a threat that one day they will take it back at multiple value. Yeah. And where we will go at that point in time, and this kind of risk exists in capital account transactions. So we are very, very much controlled in capital account, whereas in current account we are reasonably be balanced. I mean, reasonably be okay because large gap exists because of oil. that is anyways given.
Yeah. So if I have to, the recent JP Morgan inflow that is happening, because India is one of now the key countries where fund inflows are coming through the JP Morgan transaction route. And India, there are foreign investors who are wanting and are keen to invest in India. So that's the concern. Whilst we are celebrating the money coming in, it could go any point in time, and that's a bit of a concern depending on how the foreign exchange, the demand and supply chains work, right?
Exactly. We have to take it with a pinch of salt because it is not always be exciting to have very large foreign direct investment without corresponding economic growth inside. To take it to confuse you more, unless there is a good economic growth in the country, bulging foreign direct investment for capital account is not that ideal.
Okay, so that actually, so long as India is concerned, in today's India, we are relatively in a sweet spot because the capital markets, the domestic capital markets are matured and a lot of people are investing. So the domestic economy is much stronger. But yes, the fact remains that this money is easy money. It can just like a whiff of a second just flow up, go out, and that's where it's very important that I'm sure the RBI and the government are focusing on ensuring that it's well managed. And also the convertibility is not to that extent till really
correct. Absolutely right.
True.
It is absolutely managed, like foreign direct investments one, and also foreign loans taken by India is substantially large. But fortunately, the government has been very conscious in building infrastructure. You can see the roads, bullet train, all the things are going, and eventually they will reap money one day.
Yeah, agree. Absolutely.
So these advantages exist in infrastructure building.
Yeah. Okay. So what are these derivatives? Again, this is again a term which is very much associated with currency. Exchange. In our masterclass, no masterclass would be done without the understanding from you the basic. What are these derivative transactions?
Yes, derivatives originated, I think, post 70s and 80s as a result of innovation in product structuring by pundits at that point in time. So essentially, derivatives are those which are those instruments which derives its value from an underlying.
Okay.
So, for example, you have a house. So that is an underlying. So based on your house, you create a derivative that the price of that will move with some formula based on my house market price. It could be any type of product. So which started with gold derivative because gold is an underlying. Gold price move. So anything which has a price, a market price, which commands a market price plus also commands a movement is a subject of an underlying for a derivative.
Okay.
Now we have gold derivative, copper derivative, metal derivative, commodities derivative, like in NCDEX. It's a commodity derivatives exchange. So you can derivatives, you can fix your price or post your price for a future date. Kind of stuff is also there in commodity derivatives. So even in currency derivatives, the same thing started with many transactions where primarily intended to hedge the price risk of someone who has an exposure on that.
Okay, get it.
It's like commodities, farmers, they wanted to lock the price now before the crop comes in, because the crop comes in when it will be cheaper. Rather than I will not sell it. So it is essentially started with the intention to support the one who is actually exposed to that risk.
Okay.
But eventually it turned out to be a huge derivative speculative market, like options, futures in all the underlying like gold, metals, commodity, and currency also started acting as an underlying. Because currency markets move. So for example, you want to go abroad in you want to send your son to US for in 2000 next year academic 2025. And the fees they quoted you. Look, if you do it, if you close the transaction today, I mean, they said the price is likely to be $25,000 in 2025. Excellent.
Hmm.
But today it is 83 rupees for a dollar in India. But you are looking at the previous, and it was 50 once upon a time, it was 60 once upon a time, now it is 83. I'm worried. My son will start going next year. By the time I have to earn that extra difference in foreign exchange coming up, what do I do? So you are uncertain. So you go in and buy a derivative, and you are also not certain whether you will go to America. He will go some other way. If he gets into IIM Ahmedabad, why should I go to America? So you have two minds to say, oh, what do I do? I need to, I have a risk over there, but I don't know whether the risk will come in or not. So this kind of uncertain situation, the derivative trader comes to you, Santosh, don't worry about it. We will sell you a derivative of dollar to you. Delivery 25th of, sorry, 2025 October, when the America starts, $25,000 at this price.
Okay.
Excellent. Then they will ask, if I don't take it, then he will say, don't worry, take an option so that you pay a small amount. If you take it out at the same price. But if you abandon it, don't worry about it. You lose that money paid, which is a premium, like your insurance. You pay health insurance almost every year, several thousand rupees. You don't like to end up in the hospital anywhere to spend it out. So you write it off the premium. So this is comforts you. And when next year comes, if he gets into Ahmedabad, you are happy and forget the premium paid. So these kind of, it is ultimately helping the people to hedge their risk. And for having a market depth, it is necessary to have speculators. So, you cannot blame speculators for anything. Market gets its depth because there are speculators.
Okay.
So speculators lends their support into the market. So eventually now we have an excellent derivative market where you can hedge almost every risk.
Okay.
In the market. So that is why derivative came into, and currency derivative is a wonderful thing for people like us.
Okay, absolutely. And what about the kind of Forex contracts that exist today? If you could just give a bit of throw light on a bit.
Foreign exchange contracts are, one is based on delivery dates, which I mentioned. Daily cash, term, spot, forward. The other thing for the main contract recently started, not recently, quite some time, is non-deliverable forwards. We call it NDF. If you can see, Indian rupees traded in Dubai, in Dubai exchange, called NDF, non-deliverable forwards. So sitting here, we do participate in non-deliverable forwards in foreign exchange, Indian rupee dollar, in Dubai market. So you don't have to deliver. If you do a contract, it is not necessary that you have to deliver.
Okay.
You can on the date of delivery date, they will square it up and charge you or pass on to you the profit if it exists or the loss if it has gone into. So which is a non-deliverable, non-deliver contract and a deliverable contract. Now this has expanded to everything, including gold. If you want to buy gold to take advantage of the movement up, but you have no place to stock.
Absolutely.
So you go for a non-deliverable. For a period, you expect the price will go up. Then when it goes up, you sell it back and take the money. So that also is a very convenient thing in the market. Very convenient.
Wonderful. So just like stock markets, right? And you see a lot of Indians are now into stock markets, not maybe directly or through mutual fund. Is investing in foreign exchange also an option? And if so, then how easy or challenging that can be?
Indian market, there are limitations in accessing foreign market. Like here, I have accounts in CME almost across the globe. Like I trade in Indian rupee in Dubai on the forward deliverables, because there is a saying in India: once a dealer, always a dealer. So it is an addiction. So we do that, but that kind of access we do not have. But even within a controlled investment strategy with distribution across stock, bond, foreign exchange, metals, particularly gold, silver, could be. I don't recommend commodities like wheat kind of stuff. I have not studied that. But these kind of 4 underlying instruments are an excellent option. But remember, in the run of enthusiasm,
one needs to be mindful.
You know what the US exuberance, what is that called, exuberance, that US governor, Fed governor wants, some kind of exuberance.
Don't go beyond
exuberance should not be. A controlled, very controlled level of maturity. You will be able to manage your investments very well with a reasonable, decent return, much beyond what the other markets give you. But which requires some degree of training, some degree of learning, some degree of patience, and some degree of controlling your ego. Essentially, currency market participant cannot be holding an ego at all. That's the fundamental game.
Wonderful. It's been an amazing conversation over the last 1 hour on the very, very basic fundamentals, as I say, the masterclass of foreign exchange. So you have had an amazing career. As you said, you literally started in 1975, almost close to 5 decades. And you've seen a journey which was a very different stage. And today, when you're dealing in the same foreign exchange, you see so much of amazing growth, be it digitization, meet the intense social media, right from literally a hand phone or a fax machine. Today, you see literally on your cell phone or your laptop or your palm top, as we say. How's been the journey for you? And that too, starting in India to now to United Kingdom. How has been your foreign exchange journey? Share a few of your incredible,
it has been exciting since Indian times towards foreign and all those things. Exciting in the sense, only 1 or 2 things I learned from that. Despite all the, I lose money even now. Lose money even now, make money also. But essentially, foreign exchange is the market, or rather the currency market, or I will call it financial market, is a biggest regulator of human beings. Every conduct of you is regulated by that. So I will take it that call only because it is a great leveler as a personal conduct. It is a huge learning for me, despite whatever is happening behind. I learned my learning is on, they regulate me even now, because ultimately we are on a spot that we have heavy limitations.
Agree.
And we recognize that and try to move around. So it has been so far so good. Even now, I engage myself in very important activities relating to foreign exchange, contribute to Financial Stability Board. So essentially the learning is my foreign exchange.
Wonderful. Any very, probably I'm sure because foreign exchange is so in flux and so challenging at times, you just don't know what's the next second, as you mentioned. Any challenging events that probably, have been a learning for you? I'm sure there are too many of them.
There are several, but I can tell you one. While in ICICI, I used to be the head of FX. With huge trading, and my colleagues are now occupying very high positions. I don't want to name them, but I'm very, very glad. Who used to sit with me in the trading desk. They used to sweat the way in which market moves, and Reuters was kind enough to give me a wristwatch at that point in time that I can wear across 24 hours, so that if I look at the market, look at the watch, the currency market is seen over there. That were the days. And the biggest event was that US had a treasury secretary called Rubin. And Rubin was very, very, very handsome and very articulate, and we all loved Rubin very well, because when Rubin comes on television or for any press conference, we get our heartbeat up.
Okay.
Okay, any central bank governor or treasury secretary comes up, it is our heartbeat. Now, we had a huge position. We have 4 or 5 dealers, and even they will remember now, they are still living. A huge position built in dollar overbought, meaning we bought dollar against pound very high because we oversold pound. We were happy that we will get, because ICICI Bank was very small at that point in time, under 200 employees. We were suddenly at around evening, Rubin announced this resignation.
Oops.
We almost fainted.
Can
because I was young at that point in time, and our fingers started shivering, going to the screen to cover the weather, to close the deal and book the loss and go home. What to do kind of situation. We were all almost stuck, like an atomic explosion took place inside. But we didn't show that outside. You were sitting outside probably at that point in time.
Yeah.
You remember the dealing room in the basement?
Yeah.
Oh, but somehow it was around Indian time, 5 o'clock or 6 o'clock. Early morning, he announced a resignation in US time. We sat over, and until Singapore opened,
so
that is our we got some respite, because market sudden knee-jerk reaction could come back. Come back. That is the learning. Any knee-jerk reaction could come back. Where it will go. So we stayed overnight almost. When we all signed off from the dealing room for the day, pre-press journal was the print was on the first floor.
Correct.
The next day, newspaper started rolling out.
Okay, can imagine.
So that was early morning, 3 o'clock. We went home after reasonably escaping. I don't say I'm not boasting that we got, but we just escaped. That was one of the thing.
Wonderful.
So we just cannot forget.
And what about the exchange rate mechanism crisis in Europe, or the Brexit, or so many of them, right? I'm sure there were lots of
the crisis. Crisis is, as story goes, George Soros used to be, sorry to take the name, George Soros used to be the biggest punter in currency I have ever heard or read about. In 92-93, UK, British pound used to be semi-pegged. Semi-pegged in terms of exchange rate. In 91 or 92, they decided to exit that.
Okay, wow.
As a result, George Soros was sitting on a huge position, what we call position. He gained $1 billion on the next day.
Wow.
$1 billion overnight, 24 hours, $1 billion kind of stuff happening. So that is a story, not story, actually happened, it says. And also in Brexit times, there was a huge movement in the market. Uncertainty. But that time the market and the financial muscle of the participant like Barclays, Deutsche Bank and Citibank were all very high. They could withstand any kind of that situation. So that is now, interesting, and it is in between an interlude. When somebody is even now, if somebody asks me, what is your position, Harshan? I say overbought in dollar 50,000 or whatever it is. So the position we normally say is not where you stand. We say I'm oversold. I'm oversold. I'm overbought. So that is the position in currency market.
True. I have two last questions before I leave you. One is, what's your view on cryptos? Because that's something that has just come up out there. It's like the kind of the smart boy out there. Where is that market heading? We have seen banks literally going down in the United States, but still crypto seems to be quite a flavor amongst the young generation. What's your view?
I have been researching on the crypto, the underlying all those things, and I have done only half of the work as yet. So whatever I say is not to be taken as a recommendation, because I will not recommend anything which I am not sure.
Agree. Simple as that. Agree. Yeah.
Fundamental. But interestingly, I have been tracking the crypto bank in Germany, which is even now traded very well, and also the Bitcoin and kind of stuff. So cryptos are emerging asset class. Now, the only issue is that there is no regulator for crypto as yet.
Yeah.
So I am waiting crypto becoming, ultimately for a currency or a market facing professional. Like,
yeah,
if you are facing a financial market,
yeah,
any stuff that has a potential to move is a darling for us.
true. Yeah,
Is a darling. Whether it is hawa mein benta hai, I mean, we say it is just hawa. Whatever it is, whether it is a virtual or anything, but whether it has a value associated, whether that value is movable, we are for it. So essentially, our focus is that yes, we would like to have an asset class of that nature, as long as that has a value associated with it, which is still to be proved.
Yeah.
Value associated with, plus it has a tendency to move, meaning people genuinely interested in investing, people genuinely interested in speculating, because speculating is an addiction.
Yeah.
Genuinely interested in speculating are in the market. So participation is ensured. So second point is that first thing I insist is that it should have a value. Second point, value should be movable. Third point is that it should be participated by speculators and investors. Fourth one, fundamental, it should have some regulators over and top, which is still to come. Still to come. Now, the Britain in the last Prime Minister Rishi, which he is very aware of it.
Yeah.
Rishi mentioned about the dangers of this being unregulated. So, and in the higher bodies like FSB and all, BAS,
yeah,
they have started discussing cryptos, but central bank like India started digital currency now. But several central bankers are now discussing loud that how do we control the CRISPR, because everything else is now coming under the control, including stock, currency, anything is under the control of the oversight of the regulator.
Yeah.
When the regulator comes in, we will fix a meeting, we will fix a broadcast for that.
Yeah.
With crypto, how we look at it, I have still not touched the crypto yet, though my son does it.
Okay.
So my son does it. Yeah.
Okay, interesting. Another question I have for you is there's a lot of talk in India and across, especially the de-dollarization, because there's a lot of dependency as of today on dollar. There's a lot of Indian rupee versus ruble deals, which started off early, but now there's a lot of talk about let's not get the dollar in between and do the trades without the dollar. Considering the world economic order today, what's your view on that?
I will be too happy because to answer that, because it becomes a political answer. Anyway, I'm apologies for that. It is fashionable to say that we do away with dollar. It is, I can tell you, it is impossible. Number one.
Yeah.
And when euro started, 1997, 99 times, I forgot the exact.
Yeah.
Euro started, we went around on behalf of FEDE across India to lecture what is going to be this animal, euro. And in my presentation, I have all the presentation, thousands of presentation now, even now, I go through, I commented there that euro can challenge dollar. Was the headline on the presentation I used to give, that one day euro will challenge dollar. But I am proved wrong, and now I realize it is not easy to replace American dollar in the nearest future time, for one reason, that most of the trade balances, I mean foreign reserves, of the entire world, despite the South being so strong, India, China, Japan, Thailand, Taiwan, kind of people having the largest share of the trade balance, I mean, foreign reserves. Still they are predominantly in US dollar, not even an edge in euro with only hardly 20%. So I will still believe that it is politically fashionable to say that we will do away with dollar. There will be happening bits and pieces around there, but eventually I don't think that seems a possibility for, it's a hype. Replacing dollar hype, but you can have small transactions happening in dollar, rupee, rupee ruble, rupee UAE, which is possible, like your UPAI.
Yeah.
It is possible. Your India UAE trade is going up and up. So it is possible to have some localization of currency pairs, but not to replace them.
Yeah. And on the India fintech story, the India digital stack that we say, the UPI, the success, the super success, I would say. What's your view?
My God, I forgot. Sorry
to
take you for a little bit of time.
Absolutely, please, let's go ahead. It's a class. Let's talk
about extra, because I was so excited being an Indian. About 3 months ago, you know, I am on the FC, being a trade representative. Like in India, we have the self-regulatory organization, SRO.
Yeah.
But here there is no concept of SRO, but they respect the trade organization, which is the associations, very heavily, with the respect very heavily. So I'm invited to all important meetings to sound what is the things going to come. This is our view. What is your view, kind of thing. And last meeting 3 months ago, while introducing themselves in the podium, this gentleman is an executive director of the FCA, I think. He mentioned about what is that? UPI, no?
Unified Payment.
UPI in India, which has revolutionized the retail payment mechanism, which is a big thing in the whole world.
Absolutely. Can't get,
nobody in the world has ever touched that. They have been talking about for ages.
Absolutely.
You know, for example, UK mentioned that 2010 that we will do away with checks in 2018, meaning check will go away from the system. Nothing happened. Nothing happened. So then suddenly, because about a week ago from that, I was in Mumbai. Living in Mahakali Caves Road Hotel, I think some hotel.
Yeah.
And I came down there. My bag's string was broken. So I wanted to, just to stitch it around.
Yeah.
So there was a cobbler sitting on the side of next to the hotel on the pavement.
Yeah.
I went him, given the bag. He stitched it. And I asked him, Kitna Baba? He said 10 rupees. Immediately he pushed something like this in front of me. I asked him, what is this? तुझे payment नहीं करना है क्या? He looked, and I looked Indian to him.
Correct.
So he thought I'm carrying that. I said, I don't know that. Then he told me this is so in Marathi. And suddenly someone else came and did a small job. And he showed the card. And there was a message, 50 rupiya credited. So I thought, so immediately I told the gentleman, look, I have a personal experience of a cobbler on the wayside doing for 10 rupees a retail payment mechanism, which I cannot think of having done in my lifetime.
Absolutely.
It's outstanding.
Can't agree with this. Yeah, more.
Outstanding. Even in financial stability, about last meeting, I mentioned this, where Reserve Bank was also present, which is a revolutionary, I can tell you, revolutionary.
True. Absolutely.
Absolutely. No word to explain that.
Yeah. Totally. In fact, I have relocated to India, having stayed in Hong Kong for around 8 years. And can you believe this, sir? There are some restaurants or some shops that I go for my normal day-to-day buying. They say cash accept nahi karega. Nahi karega. Imagine there was a day earlier where they used to say, agar change hai to I can do something. Change nahi hai. But today, it's a different kind of a change.
My God.
And my usual, the day in, day out jobs, like simple things, auto rickshaw, buying an ice cream, or even a simple, the guy who comes home for your laundry man.
Yes.
Everything is UPI.
Exactly. During my now I realize that it is an important thing. I carry a UPI connection downloaded. And you remember, if you hire a cab in India, when I'm visiting India, or an auto rickshaw, after getting down, they will say 35 rupees.
Correct.
I will give him 100 rupees. Sab khulla nahi hai.
Correct.
Khulla nahi hai. So I carry the 100 rupees to across the shop. Are khulla hai kya? Khulla hai kya? And auto rickshaw wala, kya ho gaya, kind of stuff shouting. That is so embarrassing. I am running out of time to meet the meeting, to attend the meeting.
Yeah.
Every tension in on me for having a khulla nahi hai approach.
Yeah.
That is now resolved overnight.
Absolutely.
Straight away, 35 rupees, 50 paisa, done.
Yeah. In fact,
Wonderful.
I had an incident where I was in Goa end of last year, and I handed him cash because I was in Goa. I thought they may not be aware of UPI, and it was a very small street side shop. He said, "Cash nahi rakhta hai. Please, aap UPI karo." Amazing, right? That's
excellent.
Change. So I think that's what is India now. UPI has made a huge transformation, and it's really heading in the right direction. So yeah, I mean, it's amazing.
Because I'm excited not only on the technology side, because we are all lucky enough to be on the better side of things.
Yeah.
But I'm concerned of the inclusivity.
Yeah, agree.
That is surprising. Where on the world this has been done? They say several things. Matured market.
Yeah.
Where on the world? Show me an inclusivity of this level. They take inclusivity as a fashion.
Absolutely.
Not to this level.
I can give you another very interesting example. Just happened with me yesterday. I thought I should have some cash on hand anyways with me. I went to a nearby ATM. Both those ATMs weren't working. Had it been an earlier days, if two ATMs of a bank are not working, there would be chaos outside that branch. And I went inside that branch to make a complaint. The guy actually stared at me and said, "Don't you have a UPI?" Because for them, that ATM working is not really a big issue today.
Absolutely.
Amazing kind of revolution that's happened. So yeah, I mean, that's how India is heading towards. So great.
I'm really glad.
Yeah. Just to wind up, I recall the early days of ICICI, Free Press House, basement office for foreign exchange, corporate accounts, and tax department. Last 2 minutes, maybe.
No problem.
In the lunch hours, in the snack hours, you would just walk into that canteen and just pull something from the rack and have fun. If you any great cherished memories of ICICI Bank days in those early years of ICICI?
Yes, because I think my conduct formation, I call it professional conduct formation, happened after I joined ICICI, though I was around 40 at that point in time. 40 plus. I'm already I crossed the prime of my life at that point in time. Despite that, I can confirm my conduct was formed. Professional conduct was formed with the interaction of the ICICI, the friendliness, the collaborative approach.
Yeah.
And, no large sub approach, even the MD, Maya Saab, used to be so accessible. So these kind of things, nothing parallel I have found in my lifetime with any professional organization like GVK.
Yeah.
Everyone. And that is unparalleled. We were not tired of working. That is precisely the thing in ICICI. We never thought being tired. There was a common goal. And if any organization has to be so, I will put it exactly those days ICICI Bank is the organization to be an ideal one.
Absolutely.
And colleagues, they respected me. Anything related to exchange used to be referred to me. Even across branches, midnight calls.
Yeah.
That was all. Even now, branch fellows at that point in time, though retired, like Chennai branch was the first one open.
Yeah.
Some of the ladies from there call me because initially we were not having full-fledged technology.
Yeah.
Infosys was not to that extent full.
Yeah.
So we used to lend a lot of manual support. So it was an exciting time. Everyone I worked there continues to be associated with or friendly with.
Absolutely.
through WhatsApp otherwise. So cherish.
Absolutely. On that wonderful positive note, Harshan sir, thank you so much for being on this podcast, Sound of Money. Truly like the ABC of foreign exchange, a masterclass. Thanks for sharing. Would love to have you once again on my show to discuss the today's developments of foreign exchange and how life has changed in today's world on another day. But for now, thank you so much, sir, for being with us on this podcast.
Take care. Thank you. Bye.
And well, with that, we come to the end of this episode of the podcast, The Sound of Money, from me, Santosh Sirur, and Mr. Harshan Kollara. Thank you so much for being with us.
Thank you, Santosh. Wonderful opportunity.
Bye-bye.
The Sound of Money with Santosh Sirur.